And Delta Airlines could be looking for more space at the world's busiest airport. The carrier is in talks with Atlanta's Hartsfield-Jackson International Airport on a lease agreement that would pave the way for an $800 million bond sale. This is according to people familiar with the talks. Now, the debt offering would be the biggest such offering in the U.S. so far this year. Delta and the airport would not comment. The debt will pay for a new international terminal at that Atlanta airport.
And it was just yesterday that Delta said it would expand its flights to and from New York, the biggest U.S. aviation market. The move steps up the competition in an already competitive and financially troubled industry. Helane Becker, analyst at Jesup and Lamont Securities, is with us in studio to talk more about the competition for the skies. Helane, always good to see you. Thanks for coming in.
Oh, my pleasure. Nice to be here.
A lot of deals announced this morning: that Air Transcontinental's slot swap at Newark LaGuardia and Kennedy, Delta and Atlanta's Hartsfield Airport nearing a lease agreement. And you describe these deals as asset utilization transactions. What does that mean?
Well, basically, the airlines are, instead of just swapping aircraft or, cutting capacity in that regard, they're making better use of the gate space they have at the busy airports, and they're swapping those assets out so that they can improve their profitability.
Is this something that happened just because of the economic times that we're in? Because the question then is, why didn't they do this before?
Yeah, exactly. I think that's a great question, and I think it's partly because the economy has just been under so much pressure, and the airlines are just trying to find new ways to improve profitability. And the only thing that's left is to really concentrate their assets at specific airports and try to be more profitable that way.
In your analysis, are you confident these strategies will help them return to profitability? We should note that you do have a buy rating on Air Transcontinental, Delta, and U.S. Airways.
Yeah, it's kind of interesting. I think that that's likely to occur. We think that if you look at the revenue share in the market, U.S. Airways only has a 4% revenue share of the 3 New York area airports, the major airports. And if you look at the routes that they've been flying to, they've been very small markets with small 50-passenger jets, and they just can't compete with Delta, Continental, and JetBlue, all of whom have larger revenue shares. Delta has a 16% revenue share of the market. Continental has probably close to a 50% share of the market, and they just can't compete. U.S. Airways can't compete with the others. So the best thing for them to do is retrench back to Washington National, where they have 16%, 17% revenue share there, and then really focus their efforts there, let the others focus their efforts in New York, and then everybody wins.
Is that a strategy that's historically been shown to work?
Well, it's in this
I'm talking
case,
about when you talk about retrenching like that.
Yeah. So in this case, it works because if you look at National and LaGuardia, those are both capacity-restricted airports, and
right.
You can only get in either through a deal like this, or if the FAA makes more slots available, or if you replace a small plane with a bigger plane. So there's limited amounts of things they can do. And then at Newark and Kennedy, they're on temporary restrictions, so that's why that's been able to work. It's a long-winded answer to your question, but these have worked before. This has been tried before. It's been done before, and hopefully should work, especially as the U.S. economy comes out of a recession later this year.
Excuse me for interrupting. What about Delta's idea, this proposal to do the $800 million bond sale? I mean, is this something that Delta can handle at this point?
So yes, in a word. They've got about $5.7 billion now. The longer answer is they have $5.7 billion of cash on the balance sheet at the end of the quarter. They've been negotiating with Atlanta on the whole operation. They are trying to keep Atlanta, A, their biggest hub, and B, a lower cost operation. And so raising this money at a reasonable cost should help them do that.
And Helane, at a time when airlines are cutting flights, then why are they buying up landing slots and signing long-term contracts?
So they're not necessarily cutting flights in this case as much as they're or even adding flights, as much as they're replacing smaller planes with larger planes, so capacity still stays about the same. But remember what they're trying to do. Delta's trying to basically draw a line in the sand and kind of serve notice on JetBlue, which is building a small operation at LaGuardia, and at Southwest, which has started service this summer from LaGuardia to Chicago and Baltimore, that they own this market. They want to be New York's hometown airline, so they'll build an operation that's larger for them at LaGuardia. Remember, they do the Washington, Boston, New York shuttle, and that's been a very times when there's a lot of financial stuff going on. That's been a big market for them.
And what are your observations in travel trends? Business traveling picking up now?
Well, I'm starting to hear signs of that, talking to some of the airlines and talking to some of our contacts around, that in the last week or so, we've seen a slight uptick in close-in bookings. So we're getting a little encouraged for September.
All right. Thank you very much for that, Helane Becker, analyst with Jesup and Lamont.